go over a Redfin article titled "Nearly Everyone with a Mortgage Has an Interest Rate Below 6%, Prompting Many to Stay Put." So, this article obviously comes from Redfin. It uses their data. And the one thing that I wanted to point out was actually that I think I saw a stat where they said 23% of all homeowners, or somewhere around there, um, actually own their home free and clear. So this is just everyone with a mortgage, and essentially, so we have a large population in the United States of people either without a mortgage. So 23%, that's nearly a quarter of all homeowners do not have a mortgage. And then out of the ones that do have a mortgage, according to Redfin, they say basically 92% of homeowners with mortgages um, have mortgage rates below the current weekly average of 6.71. And I'm actually, yeah, it says well over that because right now, according to their stats, 91.8% have an interest rate below 6%. That's down from a record high of 92.9 from the second quarter of last year, which makes sense because obviously people still kept buying. In the third quarter, fourth quarter of last year, as well as the first quarter, and almost done with the second quarter of this year. So this number is going to keep. This number is going to keep decreasing because everyone that has bought a home since then has an interest rate above 6%. So that's just one thing that we will expect to see. And also, people that had interest rates below 3%, depending on when they bought, or below 4% or 5%, maybe they didn't want to refinance if they were at 3.75 or 4.25 or even, 4.75 if they only had a year or two left on their mortgage. To them, it didn't really make sense to restart that amortization process or anything like that to save some money for, essentially if they only had 2 years left on the life of their loan. It made more sense just to try to get that house paid off then. So basically, some of these numbers are going to be dropping off as people are owning their home free and clear. And then that number of people with mortgages that are below 6%, that's actually going to decrease as well because right now we're looking at anywhere they're saying 6.71. It depends on what you're looking at. I use Mortgage News Daily, and they're typically a little higher, but they include people who are paying points and stuff like that too. So yeah, I mean that's just kind of like what we're looking at there. But essentially, you could see that everybody is going to be, or all of these numbers are going to decrease compared to last year. And once again, that's just because more people are buying houses at a higher percentage in interest rate. So you're going to have a lower share of people with interest rates below 3%. So what they're saying here is that many would-be sellers are staying put rather than listing their home to avoid taking on a much higher mortgage rate when they purchase their next house. This is called the lock-in effect. I do agree with it to a certain extent. There are a lot of people who have very attractive interest rates where maybe it doesn't make sense to trade in their house payment, which is much, much lower right now because they have a lower interest rate, for something with a 6.7% interest rate, and really prices haven't gone down either. So it's not like you're getting a break on the home price, and you're definitely not getting a break on the interest rate. So people who would be like your nice to move sellers, and then buyers as well, are deciding maybe that they want to remodel instead of buy a new house. So that's why they're being locked in. I don't fully buy that premise just because people are emotional creatures, And a lot of the times, sometimes they just want to move. They want uh, to do something different. And that's not even taking into account the people who are going through a divorce and need to move, people who are getting, well, I guess if they're getting married, it depends on if they're already homeowners, if they're, each selling their own houses to buy a house and live together. Um, if there's a death in the family, there's going to be, more sellers potentially. So there's a lot of different life scenarios. If you got a job transfer, people are still going to sell. Um, but there's just going to be fewer fringe buyers potentially. So that's kind of what they talk about right here. They did say that the typical monthly mortgage payment has increased over or about $1,000 over the last 3 years, as interest rates have risen from record lows and home prices have still gone up. So that's where it hurts a lot of people. But again, people will make that move, especially as they're getting further and further into their careers. Sometimes it's like, a mid 20s or, an early 30s couple that buys a house initially. It's a great starter home for them. But as they start making more money, progressing in their career, possibly having children, then they're going to start looking at moving, even though they have a very low interest rate. So not everybody thinks dollars and cents. That's how my brain works. But I know that, sometimes life is more about comfortability and liking where you live and being proud of where you live, as opposed to just crunching numbers all the time. Otherwise, people would house hack all the time, and that really just doesn't happen. The other item of note, and I think that this is actually more interesting than just the rate lock-in effect, and it's that a record share of mortgage holders have lived in their home for 4 years or less. So the old stat used to be that people stayed at their house on average 7 years. The most recent stat I saw was it was closer to like 10 years. So really, people's life circumstances haven't changed enough, I would say, when 60% of homeowners have lived in their home for 4 years or less. Those are the homeowners that are less likely to move. Not only that, if they bought within the past, 2-3 years, these guys are also the ones that have very low interest rates, more than likely. The only saving grace there is for a lot of potential sellers, like they're not as affected as a renter trying to buy their first house, because if they've owned their home for a few years, they've gotten to ride this real estate market up, where house values have, gone up 40% or more in some areas. So they have a lot of equity that they can use for a substantial down payment. Even though home prices have appreciated for what they're buying, at least they basically have a forced savings plan and equity in their home. Plus, they have whatever additional savings that they've been able to accumulate, as opposed to a renter who, unfortunately, is not building up any equity, and they just have to save all of the down payment on their own. That's where I think that they get hurt a lot more than somebody who is already an existing homeowner looking to sell their house and then buy another one. So I just thought that these stats were pretty interesting from Redfin. Again, that we're looking at, out of the people who have mortgages, a quarter of them are below 3%, 62% below 4%, 82 below 5%, and 92 below 6%. And then we also had, out of all homeowners, about 23% of those people owning their home free and clear. So that's basically what we're looking at. If you have any questions regarding the housing market or housing data, feel free to reach out to me. I'm based in Northeast Ohio, just south of Cleveland. So if you're looking in that area, whether you're looking to buy, sell, or invest, feel free to shoot me a message and I'd be happy to help. Thanks. Have a great day.